Today in Flex in the City, we talk to Martin Vogel, Global Head of Strategy of Waystone, who believes in leading from the front. Great leadership being about transparency, trust, leading from the front, and looking after your employees. All that happening right now in Flex and the City.
Hello, everybody. This is Rachel Treese for Flex and the City. And today I'm joining Martin Vogel in Switzerland. Martin, as some of you all know, has been in Luxembourg for many years. He is now the global head of strategy at Waystone. Martin, a very big welcome to you at Flex in the City. Thanks for joining us.
Ja, grüezi miteinander. Hello to everybody. It's a pleasure being here.
It's a pleasure to have you, Martin. So we've known each other for many years. I was a young girl when I first came to Luxembourg 32 years ago, and you've been part of the environment here in Luxembourg all of that time. So as somebody who is actually a Swiss national, tell us a little bit about why Luxembourg and your journey here. How did that come about? Tell us about your story.
Sure. No, very happy to do so. As you rightly say, I'm a Swiss national, Swiss born. I had the privilege, I guess, to go to school in Switzerland. I then decided to study here, so I did my School of Law. I then finished with my attorney at law degree in the canton of Zurich. Mm-hmm. And I probably worked a couple of years as a lawyer, mainly for big corporates, or at that time banks, asset managers. After 4 or 5 years, I thought selling your business hours is actually a bad business model. Mm-hmm. In the long term, you have to work for your earnings. And I always thought I would rather be on the other side, giving the lawyers on Friday evening work. They can work over the weekend and I enjoy my time. So that's when I started looking around. What other opportunities are there in the market? And one of the opportunities actually was to join a Swiss private bank, 𝗪𝗓𝗄, in the asset management side. Very early on, I joined as head of legal, but that was actually in 96. And 96, of course, that was the time when assets under management grew rapidly with the discussion of the euro introduction. Interest rates in Europe dropped considerably, and all the investors looked for other products. And we were actually in the lucky situation to have already UCITS in place across most of the European countries. So our AUMs grew quite nicely, and that allowed me to continuously enlarge my responsibilities within 𝗪𝗓𝗄 Asset Management. Mm-hmm. Then continuously, I took over product management. I took over sales. Ultimately, I was responsible for 𝗪𝗓𝗄 Asset Management ex-USA, a member of the executive committee of the group. So that all fitted quite well. Again, I think it was probably the time of still little regulation, a lot of innovation, mm-hmm. a lot of new money flowing into the system. So it was a very happy time. In 2008, there was time to start something new. And of course, within 𝗪𝗓𝗄 Asset Management, we already had quite a strong, we called it at that time a private labeling business, where we actually rented our fund platforms to others, third-party asset managers, banks. And I always thought that is actually quite a good business. And I thought this is also something that will develop nicely in the future years to come. I actually had the plan to build up my own manco at the time. Of course, 2008 was in the middle of the financial crisis. It was a little bit difficult to find people who wanted to join that journey with me, which at the end of the day, and again, this was maybe a lucky coincidence. I met one of my colleagues from the past, Patrick Zurstrassen, who was right in the process of selling his shares in a smallish local management company, MDO. And I just decided, to buy that and go for that venture. Maybe here in hindsight, Of course, I didn't do a due diligence. I knew what the company was all about, but I didn't realize in what bad financial state it actually was. So I got probably a little bit an unpleasant surprise when I started there. But again, as I said, if I would have done a due diligence, I probably would have purchased it in the first place. So maybe a lesson learned here is, sometimes follow your stomach feeling rather than just facts and figures. Then I built up 𝗵𝗲 for 14, 15 years. And then probably around 2018, 19, we thought things are changing and maybe it's the right time to join forces with a competitor to become even bigger, to be able to follow and comply with all the new rules, regulations that are in place. So at that time, we decided to join forces with DMS. We then continued purchasing other smallish companies in the similar area. We rebranded Waystone. We continued together, of course, with the help of private equity investors, we continued to purchase additional companies. We engaged then also in fund administration and compliance services. We did that on a global scale. And today, we firm as Waystone, we do third-party manco, admin, compliance, GP servicing businesses, many other things, pretty much across the globe with around 1,700 staff and employees.
Wow, fabulous. So if there's a young person who's just joined the financial services industry listening to this podcast, what would be a really good metaphor to describe the kind of work that you do at Waystone in service of the asset management industry?
I mean, that's a very good question. I still believe probably my kids and my wife, even my family, they have no clue what we are doing all day long. I think, of course, the work I do today, of course, is a very much top-down work. I'm sitting in most of the boards of the Waystone Group, or at least in some of the boards of the Waystone Group. I'm also sitting in a number of boards of clients of ours, more on the fund side, but also in some of their asset management companies. Again, I'm continuously looking out for potential new acquisition partners. Where could we continue to grow? I still follow a number of key clients, the ones that you have grown up with, the ones that, you have built up a very strong relationship. But I also still follow new developments, ESG, I'm very much involved, many other things. But at the end of the day, what one of my former bosses always said, acquisition and client relationship is actually a responsibility of the bosses. And I think that is continuously to be true. I mean, many of my employees or colleagues, I mean, they are much better in the day-to-day activities. They are better risk managers, they're better operational managers, they're better in reporting. But I think, especially with experience, with age, I think you develop a good sense in, how to manage clients, how to serve them continuously within their needs and their developments and their further growth and expansion. And I think, again, you have to give the company in a corporate governance structure, how it's organized, how decisions are made, how it's supervised, how it's controlled. So that's a little bit where I'm engaged on a regular basis.
And so you talked about management and leadership. What do you think makes a good manager or a good leader? You must have experienced a few of those in your working.
Look, this is, I think, the experience I did make as an employee as much as when I was building up 𝗵𝗲 as a business owner. I think there are a couple of things which are very crucial and important. One thing is, of course, as a Swiss, I also served in military service. I probably spent around 3 years of my life, not in one piece, but over time, doing different activities in the military service. And of course, one principle that I think is also valid for business life is the leader, the manager goes ahead and the people follow him. You decide where to go. You lead. You show the way. And the other people should then, of course, help you making sure the direction is right. The second thing is you need to be transparent, honest, authentic. People need to be able to trust you. If you say A, you do A, and you don't do B. So I think honesty, transparency is extremely important. Even a bad message, if you rely it well, it's a bad message, but people understand and they will continue to follow you. And I think the last is ultimately, especially in the service industry, but I think this is true for all industries, the only capital or the most important capital is your employees, your staff, your colleagues. And, you need to give them empowerment. You need to give them trust. You need to give them loyalty. You need to protect them. You need to give them help and support and training so that they can actually, make their best efforts, which ultimately helps you as a leader, again, to be successful.
Absolutely. And I'm curious because we've had some guests on Flex in the City who have also come from the military. Do you think your experience in the military has helped you in your own leadership?
Oh, I'm convinced it did. I mean, again, of course, in Switzerland, you do it piece by pieces, not usually 3-4 weeks on every year. But I think the fact that, as a young lieutenant with 23, 24, you lead 50, 60, 100 people, you have a playground where you can see a little bit, are they following you? Do they like you as a leader? Do they trust in you as a leader or not? Unlike in the business where people have to make a living, they need to get a salary. So in business, most people actually are there voluntarily. In the Swiss military service, because it's obligatory, there are some people who are not really there because they wanted to. They're just there because they have to. So if you get these people along with you, and they say, no, the exercise we do today we like. If you manage to get that right, I think you can learn a lot. How to manage, how to lead, how to talk to, how to discuss things with people. You can learn a lot.
Absolutely. So if 21-year-old Martin was joining the financial services industry today, what advice would you give him?
Generally speaking, I think one thing that you don't learn at university, for example, is the most important thing in the course of your career. And I don't think it matters where you work, is actually building up a network of clients, a network of lawyers, a network of peers. If you change job and you have good connections, you can add value in your next job. And I think nobody actually ever teaches you that at university. And I was probably very lucky when I was at Julius Baer. Because again, the asset management, the fund business was growing. We were going into new countries, new asset classes, new product ranges. That enabled me to learn a lot of new people across the globe. And when I started my own venture, all these contacts were of tremendous help. They don't always need to be only clients. I knew to which lawyer to reach out. I knew to which auditor to reach out. So I think building up a network is extremely important. When I would need to give advice to me, I think ultimately it's very difficult. I think in hindsight, maybe sometimes I'm a little bit too optimistic. I usually believe in the good of people, in the good of clients. I always believe that everybody has good intentions. And I did have to realize, of course, also in the course of my professional life, that sometimes, you have clients who want to cheat, or you have clients who use maybe investment structures for purposes that may not be exactly the right one. And so maybe sometimes, questioning a little bit more the intention or the business purpose of what a potential new client wants from you is probably something I should have done a little bit more critical in the past.
Mm. So you can't see my hands because it's an audio podcast, but I was holding my thumbs up for Martin's articulation about network. So would you say that the network is the secret to your success? Or is there something else that's part of Martin that you'd say is the...
No, I think that the network certainly helped. I mean, it allowed me to start a venture in Luxembourg with two, 3 clients I was able to onboard very early on. Mm-hmm. That brought me, of course, revenues to bring MDO financially on the right track. But I think, again, I mean, it's always difficult how to say, but I think becoming an entrepreneur, you need a certain level of risk awareness. Mm-hmm. And I think that was key. Again, I think I had an idea in mind. I was kind of convinced this third-party management company business will evolve, but I didn't go too much into detail and analyze potential opportunities for 6 or 12 months. I didn't do myself a detailed business plan with 25 Excel sheets. And I think if you think too much, and this is not only for entrepreneurs, this is also for business opportunities, you have to analyze things, you have to get things right. But sometimes if you're convinced, that's the way you want to go, you should actually do it without thinking too much, without killing it by analyzing or by researching it or by rethinking, is it the right thing to do or not? So I think I have probably a decently good level of, again,
I love
taking risk.
I love it. I love it. I'm from the north of England and we say crack on with it. So.
I mean, you could also say maybe you need to be a little bit, I don't say stupid, but maybe you don't have to think too much if you think this is the right thing you want to do.
Yeah.
So I think, again, having this awareness of risk or this readiness to accept a certain risk, plus a good idea, plus I think, again, I was able to I already inherited a good number of good people, and rather than changing them and taking my own, I relied on them. We built up a very good team. So I think the combination of all of that probably makes you successful. But I see it right now. I mean, I have started also investing in some startup companies, and I think, again, you can overkill ideas if you think too much. And I think important is you need to have a clear idea. You need to be able to explain what you want to do to the rest of your world in 2 or 3 sentences. And if that's what you can do and people know where you want to go, then, go ahead and do it.
Very good. So talking about going ahead and doing it, where you've worked in and around the financial services industry all your career, Martin, if you were, taking the helicopter view here of the industry and some of the challenges that the industry's had over the years, what do you think would be a game changer, a real game changer, if there were no politics and you could really create a game-changing movement to change the financial services industry for the better? What would you do?
I mean, look, I don't think the financial industry or service industry is actually in a really bad state. Mm-hmm. Quite the opposite. I mean, when you look at how the service industry has developed over the last years or decades, it is totally different. Mm. And of course, I mean, again, I'm talking now more about asset management than banking or credit or whatever. But I mean, the main purpose of what we do is basically we take other people's money, we manage it, we serve it in different ways and shapes in order to enable people in the long term to make a performance, and for most of the people, to enable them a safe and prosper life after retirement. So I think our main goal is to give the people a decent performance on their investments. We need to give them, of course, transparency in what we're doing. We have to tell them where are the risks involved. But ultimately, that's what we all serve for, and that's why we get paid.
Yeah.
And I think that the difficulty, of course, of our industry is that we are very much dependent on how the global and the local economies are working well or not. In times of crisis, as we have seen in the banking crisis, whatever investment product you have or whatever investment strategy or asset allocation you have, you suffer. So I think, again, explaining to people what we do, explaining to people that, you have a mid or long-term horizon and what the purpose of our investment strategy is key. So I think that the industry per se is in a good shape. I mean, what can we do better? And again, I think we are in a very difficult, how do you say that, sandwich between, regulation that actually, ensures that the players are rightly doing their things, and regulation that probably are asking too much or maybe costing too much. And I think right now, if I take, for example, ESG, the ESG regulations framework, whether it's taxonomy or SFDR, in my eyes, there we are going in a direction which is not only for investors, but also for most professionals and comprehensible. We are asked to do so many things, which I think ultimately the added value for investors or performance is probably questionable. Plus, it costs a lot of money. So I think what we as an industry, what we have to make sure is that we find this right balance between safe, risk-controlled, investor-orientated, without being overkill.
Yeah, I think that's beautifully put.
But having said that, I mean, most of these recent classical, bad cases or crises we had, most of them were actually caused by people.
Mm-hmm.
And I think there again, if managers are honest, transparent, if they have the right objective in mind, then they will discover the black sheeps, whether it's within the organization or without the organization. So most of the scandals we had in the recent past are not because of lack of good regulation or not because of lack of anything. It's just because the wrong people were at the wrong place at the wrong moment in time. And again, this ultimately is then down to the boards of the companies or the CEOs of the companies to make sure that you have decent people in the right jobs that don't do these things. And I think the regulator, of course, you can always put the framework around something, but if you have a car accident on a crossing, even if there is a red light, if somebody drives over the red light, you still have an accident. So I think this is more down to people than the regulation.
Yeah, I love what you're saying, Mark. It's all about people. So that leads me very beautifully to the segue to ask you about artificial intelligence, which is not about people, it's about technology. So I'm curious, in particular in the work that you do, what's your view on the impact of artificial intelligence?
Look, maybe two comments to start with. I will be 60 rather quickly or soon, so I have no clue about artificial intelligence. Secondly, I was just at the conference last week, and I think, probably half of the time in panels, in discussions, in at the coffee chats, we talked about artificial intelligence. Saturday afternoon, I flew to Rome and wanted to rent a car. And I mean, it took me 45 minutes. The car rental system, they couldn't even, put in my credit card. And whenever they tried, everything flew out of the system. They had to retype my name and my number and my driving license number, etc. So I thought reality and what we have talked about these days were very far apart.
Mm-hmm.
But coming back to your question, I realized that we are progressing very rapidly. We did an exercise 3 years ago with one of the big fours. We analyzed all our processes as a third-party management company provider, and we thought, where can we actually apply AI? And again, of course, 𝗵𝗲𝗀𝗀, we don't have a lot of standardized procedures. We don't calculate the net asset value. We do more oversight.
Mm-hmm.
But 2-3 years ago, we didn't really detect a process or a workflow where we actually could have successfully applied AI. I realize now we have this regenerative AI in place, which is much more, let's say, advanced, can learn much quicker and is broader. So I'm sure there will be a lot of things, being substituted or will evolve. I, for example, see that with asset managers. Mm-hmm. In the old days, when they analyzed annual reports or figures, or somebody read their balance sheet, collected the numbers, and then gave a summary to the managers. That's what we propose. Today, you have it in 2 minutes out of a vast majority of data.
Yeah.
So, there will be a lot of change in how you do work. But again, maybe I'm too optimistic, as I said before, but I think it will be as it was with internet, with email, with all new things that we have experienced during our working life. In my eyes, it will enable people to be more creative, to concentrate on more interesting work, maybe on more challenging things, and it will most likely make the day-to-day, the number crunching and the nitty-gritty operational details easier, faster, and most likely also more secure.
Absolutely. I love your wisdom. Again, we're back to all being about humans. So my last question for you today, Martin, when you're not working for Waystone and in the financial services sector, or being a wonderful husband or father, are there any hobbies, or is there anything that you love doing outside of your work?
I always tell people, the reason I still work is because I'm probably a very boring person, and I don't really know what to do with my time if I wouldn't have a job. So, of course, I have worked most of my life. I still tremendously enjoy working. I still find, especially in our industry, it's so much fast moving. You still keep your mind fresh and busy, engaging in all the things that change, whether it's regulatory or operationally, or as you mentioned, AI. So I wish to stay in business for as long as I can. Maybe, of course, less operationally involved, more in a supervisory or advisory capacity. But what I like tremendously, I really enjoy spending time with my family. I really enjoy, again, in wintertime, I go skiing a lot. Summertime, I like to be out walking or playing golf. I like to travel. I like to spend time with my friends. So I think, I'm as average there as you can be.
Well, I think, wasn't it Warren Buffett and Charlie Munger that said retirement is very overrated. So I think, Martin, you're a Swiss Charlie Munger or Warren Buffett. So thank you so much for being on Flex in the City this afternoon. It's been a fantastic talking to you. Thanks so much.
Oh, thanks to you. Thank you, Rachel.
You just listened to Flex in the City. Catch us on our next episode.